The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. My name is Greg Newman. I'm Corporate Communications Manager for World Council of Credit Unions. I'd like to welcome everybody on the line to the COVID-19 Regulatory Advocacy Issues webinar. I'm joined today by Brian Branch, our President and CEO, as well as Andrew Price, our Vice President of Advocacy here at WOCCU. Through this webinar, they hope to address the regulatory advocacy challenges faced by our members and their credit unions in coping with the coronavirus COVID-19 pandemic and offer some guidance and best practices for dealing with the crisis. The topics include an overview of the operational impacts of the pandemic, both in the present and with the prospect of a global recession, a survey of various national regulatory responses as they apply to credit unions, guidance and regulatory requirements released by various national regulators and international standard-setting bodies, best practices designed to help credit unions with advocacy to policymakers on the crisis. Our goal with this is to help you decide which measures may be beneficial or harmful for credit unions, but also to assist on advocacy with policymakers as they formulate their responses to the crisis. I just want to note for everybody who's on the call that on the panel that you see, there is a questions drop down. Under that, if you have a question, you can put your question right in there, write it out, and at the end of our presentation, we'll have Brian and Andrew answering those. We're going to start our webinar with Brian Branch, who's going to go over some of the basics for you for this regulatory advocacy issues webinar. Brian?
Thanks, Greg, and thank all of you for joining us. This is an unprecedented time that we're all facing. We've had the chance to talk to many of our credit union member organizations and credit unions in many countries around the world, and we certainly see some patterns emerging that we wanted to share with you and get your input on today. And Andy will speak more specifically to the advocacy issues, but Andy, if you could advance me to the next slide. What we're seeing, frankly, are three waves that are impacting credit unions around the world. And as you can see on the screen, the first wave is the coronavirus, the health crisis that's impacting our members, impacting our communities today. And one of the questions that we've had is, well, how are credit unions responding to that? What are they seeing? How are they responding to their members? The second wave that we are beginning to see impact credit unions now, it will really be at its height as we move into the second semester of this year, and we'll all be dealing with as we close out the fiscal year for 2020, is the institutional stresses that this will cause on our profit and loss statements and our balance sheets of our credit unions everywhere. And the third wave that we're all seeing beginning to gather inertia now is the global recession. As value chain production have been disruptive, as businesses have had to lay off staff and people have not been able to work, we'll see a very significant impact on our economies around the world, and again affecting our credit union institutions. If we could go to the next slide, please. When we talk about the first wave and health crisis, you can see on the slide, really we're looking at the impact of members being sick, not being able to work, not being able to generate income, which then means that they're going to have difficulty making loan payments. They're going to have to live on their savings. Savings very often tend to be limited and can provide people with the ability to sustain themselves for a limited amount of time, and people are starting to begin to consume their assets. They're starting to see a decrease in the assets that they have. They're not just their savings, but their retirement investments, and in some cases their housing and their vehicles. We've seen in the news the impacts these have on communities in terms of unemployment, stress on the health systems and education systems, and the beginning of failures of small businesses. So what we see credit unions doing in response is, first of all, addressing how they can interface with their members, protecting the safety of their employees as they're providing services to families, members who desperately need cash at this time of economic disruption. So we had lots of conversations about remote service delivery through online banking, mobile services, video tellers, And those credit unions that have advanced further in terms of digitization are able to provide more remote service and provide more protection for their members and their employees. But not everyone is there. Not everyone is at that point today. So we've seen lots of educational materials in providing credit unions with guidance in terms of how they can help their employees protect themselves and protect their members through use of sanitizers, hand sanitizers, gloves, wiping down their service counters. In many cases, taking measures to uncongest or uncrowd their lobbies so that people aren't crowded together. In many cases, we've seen credit unions put up plexiglass in their service windows to give that separation between the employees and the members served. Increased use of shared branching systems, closing branches, and of course using ATM machines. So one of the lessons that we've learned is that the digitization priority that we've talked about for a number of years now has really come to home with us, but we're not all there yet. There are still some things we can do to protect our members. Well, that's interaction with the members. And the other is what kind of financial impact mitigation we can provide to the members. And so we've seen credit unions put a lot of work into loan restructuring, deferring payments, reducing interest, accepting interest-only payments, providing extensions on the terms of loans, helping members with debt consolidation, and also providing advances to members, low-interest loans to help them get through the immediate crisis, providing fee waivers, and allowing no penalty withdrawal on certificates of deposit. All of these certainly have a financial cost for the institutions, and we have to watch the impact that this has on the profit and loss and the balance sheet of our institutions as well. This is also a time where financial counseling for members has become more important as they're trying to find their way through the financial crisis and the health crisis. And it's a time when we're seeing dramatic increase in cyber attacks. And so identity and data protection, guidance and assistance, education for our members is critical as well. Credit unions, especially those out in rural areas, have become an important source of distributing health information, good practices in terms of protecting members in this period. So this is the first wave, the health crisis, which is still upon us. We see Korea coming out at the end of that tunnel. We see the United States now in the middle of that tunnel. And we see a number of countries in Latin America and in Africa just beginning to enter that tunnel. If we go to the next slide, please, we're talking about the second wave. All of this will cause institutional stresses on our financial institutions. So as you can see on the screen, we're going to have to deal with increased provisions and write-offs as the delinquency increases in our portfolios. We're going to see losses on our investments as the value of investments decreases. And we're going to initially see some decreased liquidities as the amount of loan defaults increase and savings withdrawals increase. We're going to see correspondent banks start to limit credit union withdrawals of their liquidity. And so in many cases, countries have told us, well, we've said we need to go do our bank withdrawals first to address our liquidity concerns and try to manage that risk. Andy will talk about some of the actions that we're seeing on the part of state-imposed lender relief or liquidity controls, and therefore the kind of advocacy actions that we see members taking, or we might want to suggest to help address the impact of state-imposed lender relief and liquidity controls and the impact that they have on our financial condition. So again, first wave is the health crisis, the impact on our members, how we try to respond to that, help our members, which is our mission. Second wave are going to be the institutional stresses that we have to be cognizant of on our own balance sheets and profit and loss statements. If we go to the next wave, the next page, please. The third wave is the global recession. We're starting to see that start to begin to take up more inertia. We see many of the industrialized countries now taking major economic stimulus and aid packages to try to respond to the number of people that are unemployed, laid off, losses in investments, small businesses closing down to try to mitigate this recession. And so the depth and the extent of that recession will really depend on the extent to which national governments are able to assist their economies in mitigating that. We're going to see continued unemployment. We're going to see delinquency in the portfolios continue for some time in response to that unemployment and the failure of small businesses. So this is one of those times when credit unions tend to shine. They tend to, as Jim Nussel from CUNA says, be the financial first responders in the economy. So we've seen and we have weathered these types of economic crises many times, these kinds of shocks at national level many times, and very often we find that when the other formal financial institutions stop lending, credit unions continue to lend to the small businesses and to the consumers who need help to get through these times. And what we see as a result of this is that the liquidity comes back. And we've seen in a number of occasions when we have an economic crisis, people tend to flee to safety. They tend to put their savings in their community institution where they have a sense that the institution is safe and sound, and their liquidity, their savings will be there when they need them. So we'll see an increase in significant liquidity coming to our institutions as we get through this global recession. And then the challenge will be to get that liquidity back out into profitable and sound loans that are generating income for our credit unions to help them increase their income and rebuild their capital reserves, which will help them get through the crisis. So our challenge is not just getting through these 3 waves of negative impact. Our challenge is also being prepared for that 4th stage when our institutions start growing again, because we will have seen the worst of the crisis pass. We'll have seen consolidation in our system. We'll see smaller credit unions struggling and perhaps not being able to continue operations, but there'll be increased consumer demand for the digitization. They will be looking for institutions that respond not only to providing them with safety and service, but the ability to continue to access their services through digital means. So let me stop there and hand the floor over to Andy.
Thanks, Brian. This is Greg Newman, Corporate Communications Manager, again with World Council of Credit Unions. Just want to welcome a few of you who joined us here in the last few minutes. This is our Global Regulatory Advocacy Issues webinar. And I want to remind folks, if they have questions, there is a tab that they can write their questions down. At the end, I will have either Brian or Andrew Price answer them. For right now, we're going to turn it back to Andrew Price for the rest of the presentation.
Hey, thank you, and good morning or good afternoon, depending on where you are in the world. Brian gave us a wonderful overview of the big picture economic pictures that are coming down. What I want to do now is walk you through some of the issues that we're seeing out there and some of the problems that I've seen credit unions that are having with their regulators in dealing with their response to the coronavirus issues. So where I'll start first is with some of the policymaker issues. I'll talk about the international standard setting bodies and the responses that we've seen out of them. The operational issues, some of these could be offensive, some of these could be defensive, some of these can be responding to restrictions or actions that your regulator has imposed upon the credit union, or some of them could be issues that you may want to take to your regulator to ask them to give you some relief in dealing with the coronavirus issues. And advocacy strategies, I will weave those in as I go along, and when I get to the end, I will kind of recap and then walk you through some of WOCCU's recommended items out there. just as a quick matter too, also on our website we have our coronavirus tab where we have a lot of the related issues up there. I've just put up a document that shows a lot of the measures that other regulators have imposed in various countries, and it's kind of early on. I anticipate to populate that with a lot more countries as the days go by here and we get more information from some of our countries. So just to let you know that that's out there, it might be a good reference for you if you're looking for some items that you may want to consider for your credit union or for your members as well. So let me start off with the international standard setting body's response to the coronavirus issues. We've really seen three of the big ones come out with statements that I think are quite favorable. It shows that they are acknowledging what the problem is, that it's a health crisis, and that they understand that it's going to have a tremendous impact on the financial sector as well. So the Financial Stability Board has came out with the statement that they're encouraging national level regulators to make use of the flexibility that are out there. And more importantly, to ensure that capital and liquidity resources are there for the financial system if needed. So this is a great direction down to your national level regulators to take a lot of bit of flexibility when they're trying to impose some of the regulations in there, particularly in responding to the coronavirus crisis. And just let me back up for a second, because international standard setting bodies, they don't set the law, but they're highly influential with your national level regulators. They look to these standards to see what they should do. Almost all the central banks participate in virtually all of the international standard setting bodies out there. So even though this isn't a direct law, your national level prudential regulator will want to look at these standards to see how they should react, and will take direction from them when these come out. The Basel Committee has come out with two items. They came out early on with the statement, and just yesterday they actually came out with a 1-year delay in the implementation of the Basel III. They have finalized the Basel III standards and are expecting national level regulators to adopt that. But in light of the coronavirus, have come out saying, hey, we need to hold off right now because of the crisis as well. I don't want to say more importantly, but also early on, before they did the 1-year delay, they clearly came out with some statements that are designed to give direction to national level regulators that they can take some flexibility with the capital standards. Allow you, the Basel III has capital cushion buffers that are designed to allow for losses during the crisis, and they're saying, hey, go ahead and tap into those. And more importantly, the direction that members, which is referring to the national level regulators, have flexibility to undertake further measures if needed. So they're giving your national level regulators a lot of leeway to have some flexibility doing this, and this is good for credit unions. Some of your capital standards can be relaxed if they want to, and a couple other things along with that too. The third body that has come out with guidance, and I'm going to get into a little more specifics on this one, which is that the IFRS, the International Accounting Standards Board that sets IFRS 9, more importantly, the accounting for your allowance accounts, and if you're in the United States, CECL is what you're looking to. They have also came out with a statement allowing for some flexibility and a couple other things, and I will talk about that. That just came out a couple days ago as well, and that impacts a lot of these things that are going on, particularly with refinances, troubled debt restructurings, payment deferrals. Some jurisdictions are mandating a moratorium on payments for a certain period of time. So how that runs into your accounting is an issue that's out there as well. So Brian alluded to a lot of these items before, but some of the items that we're seeing out there that are quite common are a moratorium on payments. I've seen some countries put them in through September, some through the end of the year, which is startling to me, but nonetheless, we see that. We see moratorium on foreclosures, moratoriums on debt collection. Some of these are for a short period of time, sometimes 30 days, 60 days, moratoriums on eviction. We're also seeing physical lockdowns, restrictions on your operations, whether you can operate. In the Ukraine, for example, they've shut down the entire credit union system, since most of the credit unions there, matter of fact, I think all of them don't operate online. They only have physical branches, and they did not want to have them operating in a way that might spread the virus. So they've been temporarily shut down from operating there as well. As an aside to that, one of the issues that we see coming up a lot is the ability for the credit union to be labeled an essential service provider, which will allow you to continue to operate even though these mandatory lockdowns and restrictions on your operations are coming down as well. So that a lot of these orders affect how you can serve in the branches and whatnot, and I will talk about a little more specifically on that in just a second here. We see stimulus packages being passed left and right to help support small businesses or SMEs, and employee protection measures supporting unemployment. You see some restrictions on being prohibitions on firing someone or letting them go during the crisis. And I'll talk a lot more of it, but prohibitions surrounding cash withdrawals too, to prevent runs on bank. I'll talk a good bit about that. So going back to the IFRS 9 statement that just came out as well, I apologize I didn't update these slides with the latest that just came out, but I hope to talk through some of these issues. One of the most common things that we see coming down are some of these moratoriums on payments for a certain period of time, saying, okay, consumer, you're not going to have to pay your loan back or your mortgage back for a couple months here while we're in the crisis. And a lot of these things come out quickly, and we often know that regulators don't know what that means. And you're looking for some specificity in this and how you're going to account for it. So the IFRS 9 statement, a couple things that they put out in it. I mean, the first one was about payment holidays. They say in there that that should not automatically result in those increments that you're going to have to make an allowance or a provision in your allowance account for those items, that you can use that as a tool. So if your credit union wants to offer that kind of as a relief to someone affected by the coronavirus, that was in the IFRS 9 statement that came out as well. The other thing on the expected losses that came out was that they also said that it's going to be likely difficult to incorporate the specific effects of COVID-19 and other government support measures to include that analysis in what your expected losses is. And so the direction and the guidance that they kind of give out is say, hey, you don't need to do anything immediately, wait till the crisis is done, and then you can look to after the crisis to include some of that analysis into your post modeling that you might do, and adjustments to be considered at the appropriate time. So what's really nice about the statement is, again, even from an accounting standpoint, they are signaling to national level regulators to give you some flexibility along with that. And we found that has been a big issue. Some of these moratoriums that come down and you don't know, can you accrue interest during the moratorium? Are you going to recapitalize the payments at the end? How is it going to work? And you need specificity on that. So this is a good advocacy time for you to take that to your regulator and say, hey, we need this. And if your regulator is hesitant, if they are resistant, now you have an international standard that you can look to. Also, there's guidance that has come out from the European Banking Authority, the European Central Bank, the Prudential Regulation Authority that's in the UK. Malaysia have also had specific statements that are out there. They've all put out guidance that is likewise taken a flexible. So if you're not in one of those countries and your regulator is not giving you some flexibility with respect to moratoriums and how you're going to account for that to give you some relief, these are things that you can point them to, particularly the IFRS statement that has come out on there. In the United States, they just passed a bill that has adopted a delay for the implementation of CECL. CECL, IFRS 9 are essentially the same things with the expected loss. There's some differences between them, but essentially the same concept. So that is out there as well. And if you need some more help with that, that's out there as well. So some of the more accounting issues that's kind of coming from the Basel standards as well. Some jurisdictions, we see them giving a change in your risk weight for certain loans. That way, if you're making some modification or there's certain loans that are on your books, some jurisdictions are giving you some flexibility with how you're going to have to account for that in your capital standards as well. Modifications, refinances, forbearances, giving you some relief for your allowance standards as well. We're seeing that coming down as well from some regulators as well. One of the things that you might want to ask for is, to your regulator is flexibility and leniency for characterizing some of those modifications that you might do, or a payment forbearance that you might want to give as well. In North Macedonia, they actually extended the timeline to characterize a loan as default. It's typically set at 90 days. Some jurisdictions have 45 days, 90 days. They actually extended their definition of default from 90 to 150 days, which gives you a longer time. So if you have some troubled payments with a particular loan, it gives you a longer period of time before you have to start making an allowance for that. So that's out there as well. Just wanted to give you an example of some of the things that regulators are doing on that end. There's a lot. I know there's a lot of nuances with this, and I'm skirting over some of the technicalities of some of that. But I wanted to highlight a lot of those issues for you on the accounting and the capital standards as well. Another issue that we're seeing kind of around the world is being designated as essential. And this may be articulated different in different countries, but the importance of being designated as essential, allows you to avoid some of the restrictions that are coming down as far as can you open your credit union, can you open your business, and allowing you to come to and from work. Some jurisdictions are requiring you to have papers before you go to work. So being designated as essential sometimes is difficult for a credit union. Sometimes they're not included in the definition of a bank. And so this is important. If you're having trouble with that, let us know, because we can point you to a lot of jurisdictions where credit unions are designated as essential. And one of the advocacy pointers on this is when you're going to your regulators, the key here is to point to your members and point to the services that you provide your members and let them know that you can be key to helping all of the citizens come through the crisis as well, because of your lending, your access to cash, all of the things that, you all know these things backward and forward, but you're going to want to tell your story and the importance of why you need to be designated as essential for being able to operate during the crisis as well. So that's an issue that we continue to see out there. Liquidity and runs on credit union. We have heard this in certain jurisdictions that they are having some runs, which is quite frightening as well. So this is one of those issues that you definitely want to have a lot of conversations with your regulators. And I've kind of put a litany of items of things that you might want to consider. Items such as putting limits on cash withdrawals. A lot of jurisdictions allows that to be done at the credit union level. You don't have to ask for permission. You can just do it depending on the analysis that you do. We have seen some jurisdictions where The regulator has mandated that for every financial institution that's in the country. So that's coming down as well. That's definitely a time that you're going to want to talk to your regulator later about that, so that you can manage your liquidity and cash positions. Your ability to if you are having liquidity problems, your ability to tap into either a central or perhaps a corporate credit union or otherwise. Sometimes there are prohibitions on that. It's something that you might want to talk to your regulator about to provide you some flexibility in that regard. The other thing is kind of member facing. If your system has deposit insurance or a guarantee scheme, that's something that you definitely want to make known to your members. To give them a level of comfort, so that you can educate them. Hey, you don't need to take out all of this cash at once, and that can help you with your liquidity. Hopefully, your regulator is doing that as well. Not all systems have deposit insurance and guarantee schemes out there. I understand that. So if you don't have it, obviously that's another issue as well. Educating your members that their funds are safe, and getting your regulators on board to discuss this issue in a public manner as well. The other thing that you need to consider, getting cash during a crisis, particularly when we're having lockdowns, can be difficult. So just I put that out there just so you can consider that as you're thinking through how to manage, if you are having liquidity or runs on a credit union at this time as well. All right, member financial impact, some of the mitigation to help consumers and your employees go through. A lot of credit unions are doing this on their own without regulator guidance. Sometimes it is mandated by your regulator, but loan restructuring, deferred payments, reduced interest. I've even heard one jurisdiction where they're looking to cut interest rates virtually in half as a means to help the citizens kind of make it through the economic pressure that they're going to go through. Obviously, that has huge consequences for your balance sheet as well. And how are you going to manage that? And it's going to affect your earnings, and a whole host of issues arises from that. Interest-only payments, perhaps for a period of time, is something you might want to consider. Loan extensions, debt consolidation, advances, low interest loans, fee waivers. All of these things are items that we have seen credit unions offer to these members, and I just kind of wanted to put a lot of them on there. If you go to our website and look at that sheet, I've started to put a lot of these things that credit unions are doing on there as well. No penalty for withdrawals on CDs, insurance services. Some systems are into that, providing that for their members as well. Other items that you might want to, that are kind of not directly financial, but things that a lot of credit unions do: financial counseling, identity and data protection. We see a lot of credit unions putting out guidance on scams, people trying to take advantage of the coronavirus situation. So putting out guidance saying, hey, look out for this particular scam, and health information as well is also useful for you to put out there for your members at this time as well. So we can portray credit unions as, hey, being the solution. So other operational, your physical disruptions. We've seen a lot of credit unions that are doing a lot of really neat things to help keep their employees safe. Everything, I've seen credit unions who have 3 different shifts for all their employees, so that no one particular group of employees is working at the same time as the other. In case one group happens to get infected, you have people who are not affected who are able to come in and still provide services to your credit union. A lot of transactions are being pushed online, remote services, mobile video tellers, shared branching, those kind of things out there are being pushed to help deal with the crisis as well. Spacing out lobby waiting areas to avoid crowding. Sometimes you have to close your lobby as well and then doing all the things that you know to do, cleaning your teller glass windows, have gloves, sanitizers, all the things we all unfortunately all know very well how to do at this point in time as well. Reporting issues. One area that I think definitely want to talk to your regulator is getting some relief from all of these regulatory reports that we all have to do. AML, CFT reports. Yeah, by the way, first time I think I mentioned AML. I have not seen any guidance come out of FATF yet that's directly on coronavirus yet. However, I have seen a lot of national level regulators who were giving relief from some of your suspicious activity reports or currency transaction reports that you need to file on a regular basis. They've given you some extension on deadlines to file those and whatnot to give relief to financial to give you some relief during the crisis as well. Some of the required regulatory reporting, call reports, all of those, I've seen some of those being extended. Tax deadlines, not only for your members to file, but sometimes in jurisdiction, there's tax reporting requirements for the credit union. I have seen those being extended. Regular exams. A lot of regulators now often don't want to come in physically to your branch anymore for fear of spread as well. So we see regular examinations being postponed as well, and some of the audit deadlines as well. These are all items that you might want to take to your regulator if you need relief to ask them for. These are very common in a lot of the other jurisdictions as well. So those are a lot of the big ticket items that I see out there. Want to go back to, some regulators are hesitant to act quickly. They don't want to give relief for fear of having something go wrong in the system or do that. For those items, point to your international standards. We're seeing that come out of Financial Stability Board, the Basel Committee, the IASB with the IFRS 9 guidance as well. And then the second item that you want to do is point to other countries' efforts, because if you can show them, hey, look, here's a neighboring country, they've done this, they didn't have a problem with that, let's get you on the phone with them, talk to them, so you can understand that. If sometimes regulators are hesitant to do that for credit unions. So these are items, tangible items that you can point to help them get a comfort level with providing you with relief. If your credit union isn't viewed as important or essential, point to your membership. Tell them how many members you serve, and tell your story. I mean, I can't say that enough. I mean, what you do for your members, and what credit unions do for their members. Point to that and show them how you can be a solution to meeting the economic needs during the crisis as well. So to kind of recap, we have this document on our website as well, but it's some of the basic things that we think regulators should provide some regulatory relief for. Your flexibility on restructuring your loans, reduced documentation for some of these loans. We're not saying to get rid of all consumer protection disclosures on there, but a lot of these, short-term, smaller dollar loans can be made fairly quickly, and if they can reduce your regulatory burden, it's going to make it easier to assist your members and to help the public out with some of these loans. Reduce the provision requirements, your allowance requirements, your IFRS 9 for some of these state-mandated moratoriums on payments, so that you're not having to put additional money aside for loans that aren't really troubled. We've seen extension of the definition of default. That's one way to do it. There's probably 20 other ways you can do it as well. Ease restriction for correspondent bank services. So if you want to provide some services, de-risking is a huge problem around the world. Access to a correspondent bank for payments, for liquidity. Sometimes you need that. It would be nice if regulators make that a lot easier for you during this time. Allow for services, cash and payment service to non-members as well. I think it's a good one. We've seen several jurisdictions do that as well. I mean, that's to help the financial services sector, including credit unions, help citizens that are affected by the coronavirus epidemic out there. Allow flexibility for adjusting your hours of service. That's definitely needed with all the moratoriums, and some jurisdictions have requirements that you be open a certain number of days per week, or you not close more than 2 days in a row. Definitely try and get some flexibility with that. Virtual meetings for your board, for your management membership meetings. That's I think is a no-brainer. Based on how this epidemic is spreading, and we're seeing a lot of jurisdictions starting to do that. And of course, liquidity support and support for employees, helping them with wages and whatnot. So I've gone on and talked for a while here. I think I'll turn it back to Greg, and we'll check to see if we have some questions out there that we can answer.
Thank you, Andy. I do want to remind folks that if they do have questions, we have a few minutes here. You could write them in the questions panel, and either Brian or Andy can try to answer them for you. Just so you know, Andy, a lot of folks have asked if the slide deck would be available for those, and I believe for those who would like it, we can certainly provide that. I also want to say too that we are going to be, we are recording this webinar. We will be posting it both on the advocacy section at WOCCU.org. We'll also post a link to it at our coronavirus COVID-19 updates resource page. That's a blog that we have for those of you who haven't seen it. If you go to the homepage at WOCCU.org, you'll see a little red tab that says COVID-19 updates, and we've been providing different resources there for our members across the world, both on what's going on in a regulatory standpoint and also what's going on in regards to what credit unions are doing around the world to respond to this crisis, both to help their employees and their members and their communities as well. We don't have any other questions at this point, Andrew. Andrew or Brian, is there anything else that you would like to add before we wrap this webinar up?
No, just to say, I believe the answer, yeah, we will make the slides. I think we can email it to everyone on the attendee list. I've also, if you see my email address is there on the screen as well. Feel free to email me. I'll be happy to email it to anybody who wants it as well. And please feel free to reach out if you have any questions as well. Happy to help.
Great.
And, this is Brian, just echoing Andy's comments, Greg, that one of the things that struck me as we've talked to our members around the world is that a lot of members are describing their circumstances, asking what's happening in other countries, how other credit systems are dealing with the challenges. So please be sure to send us your questions or your comments. And if you see things on the coronavirus section of our webpage that strike more questions or comments, by all means, please send them to us, and we'll try to provide information support. Thanks.
Great. We want to thank everybody for attending today. And again, I want to mention that we will make a link to this recording available on our YouTube page. We'll also, we'll put this on our YouTube page. We'll make that link available on our website in a couple different places. And by all means, if you find that it's useful, please share with your member credit unions. If you're on here from one of our national members, or also share it with your people in your credit union if you're on here from a credit union for one of our members. So we want to thank everybody for joining us this morning, and have a nice day.